Hello and good morning, everybody. You're with Martin Penev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Markets Outlook. As usual, starting with a short coverage of all major markets. North American comes first. The Dow yesterday sideways, going slightly up today. The Nasdaq is also sideways, going slightly up. The Dixie Index is down to 96.25. USD Loonie 88 pips down, USD Swissy 135 pips down, 290 range versus the yen. The dollar was 45 pips down. Unemployment rate and net change in employment and participation rate for the loonie, for the Canadian dollar today, and also for the US dollar import price index month on month, year on year. A lot of major reports next week for the US dollar and for the loonie, starting with retail sales for the US on Tuesday. Euro markets, the DAX 30, 630 range, almost 200 down. CAC 40, 270 range, 60 down. German trade balance, 13.6 billion versus 17 expected and 19 previous. German current account, 13.2 billion versus 17 expected and 26.3 previous. French industrial production reports month on month, year on year, and industrial and the manufacturing production. All of those reports came way better than the anticipated, and more importantly, way better than the previous reading. Now for the tip, the star of the show yesterday, the ECB cuts refinancing rate to 0% versus maintain at 0.05 expected. The interest rate on the main refinancing operations of the Eurosystem will be decreased by 5 basis points to 0, starting from the operation to be settled on 16th of March. The ECB cuts marginal lending rate to 0.25% from 0.30. Also cuts deposit rate to -40 from -30. And expands the quantitative easing from 60 to 80 billion starting in April. ECB will launch a new series of 4 targeted long-term refinancing operations starting in June. Borrowing conditions in these operations can be also as low as the deposit facility. Investment grade euro-denominated bonds issued by non-bank operations established in the euro area will be included in the list of assets that are eligible for regular purchases. Quite a significant change. The Euro Stoxx 50 spiked 3.70% higher to over 3,000 points. Which is something quite good gain ahead of the ECB decision. The euro pairs, of course, showed severe volatility yesterday, but the euro wasn't the only currency, the only one that got hammered by the ECB decision, since the Swissy was pushed off a cliff as well. However, it's not clear if the euro took the Swissy with it, given the close trade relations between the Eurozone and Switzerland, or if the SNB deliberately intervened. It's also entirely possible that Forex traders just sold off the safe haven Swissy due to the risk on the sentiment. The USD Swiss franc was up by almost 100 pips, 1%. The Aussie Swiss franc was also up by almost 1%. The Kiwi, 75 pips. Mr. Draghi, no plans for more cuts. The ECB to explore non-traditional easing instruments. In the press conference, just moments after Governor Draghi announced a huge batch of easing measures, which included several rate cuts and an expansion of their QE program, he pointed out during the press conference that this might actually be the last of the rate cuts. According to Mr. Draghi, the stimulus plan should reinforce the momentum in the Eurozone economy, and given this outlook, he doesn't see the need of lower rates again in the near future. Although he also said that interest rates might remain at these low levels for a long period of time, and that the ECB could consider other non-traditional easing options. Euro Forex pairs were already busy erasing their previous losses at that point. A quick look at the UK markets. The FTSE 100 lost 83 points yesterday and closed at 6,067 points. The 10-year gilt yields closed at 1.48% yesterday. Housing price balance yesterday 1% weaker than the anticipated at 50. Yesterday, currency pairs, the cable 84 pips up from 190 range going sideways versus the yen 40 pips up, 220 pips range, 72 pips up already today versus the Aussie 135 pips up yesterday, 350 pips range going pretty much sideways today versus the loonie 225 pips range, 103 pips down today already, and the pound versus the Kiwi 37 pips down yesterday, 340 pips range going pretty much sideways. Of course, versus the Swissy, 125 pips down yesterday from 270 range. Today, we have goods trade balance non-EU, total trade balance, consumer inflation expectations. These are all TA3 events. Next week will be quite interesting for the pound speculators. We will give you the updates on time as we usually do. Quick look at the Asian Pacific markets. The Nikkei 225 122 down yesterday, opened with 94 points bearish gap today and surged with almost 400 points already, erasing yesterday's losses and on profit. The large manufacturing quarter on quarter weaker than expected yesterday versus the on currency pairs, as I mentioned, the JPY made huge range versus the Kiwi. Retail sales in China, industrial production and urban investment year on year are due tomorrow, and on Sunday by the beginning of the trading day, machinery orders in Japan month on month, year on year. On Monday, we're going to see the Bank of Japan press conference. On Tuesday, we have interest rate decision, monetary policy statement as well. On Wednesday, the following day, the territory reports on the industry index and industrial production year on year, month on month. Exports, imports, adjusted merchandise trade balance, merchandise trade balance, all those reports are due for next week. By the way, next week is going to be quite interesting. We're looking at a lot of action on all of the main currencies. Commodities, S&P 500 index had a range of 42 points at a little bit over 2,000 points currently. Gold had a range of $35 up to $12.70. Even over. Silver had a range of 50 cents at $15.55 currently. The oil had $1.20 range yesterday. Natural gas is trading at 1.80 at the moment, range of the usual 8 cents. Today, Baker Hughes oil rig count is due. That is pretty much all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.